YouTube, it's Louis here. Hope you're all well. We're looking at Quant today on the daily time frame. This was a little bit confusing over here, but I explained how when something closes here, the next candle should open right there, not up there. So essentially this is a doji. Because it's showing it open up there, which is not true. The open is where the previous one closes. And so technically this red one actually opened here. So everything above this point is a wick. And if we go to this other quant chart, we can see that right here. So yesterday we got something called a bullish hammer or spinning top, because it does have some wicks to the upside, but larger wicks to the downside. You can also call it a tweezer bottom or whatever. We were essentially talking about how this inverse head and shoulders could still be at play. Although we had a descending triangle over here, we still have this inverse head and shoulders. It's not valid yet, but again, we've been talking about the neckline, but we've essentially, we're not really caring about the neckline too much of this. I'm more focused on the 0382 fib because it's at psychological level, which is $125. And over the last week, we've been explaining how each $25 interval that can be a psychological level. So what's interesting is $150 is where we had this insane pump, dump, and dump here as well. So this is a key level of resistance as well as support in the past. Let me just get rid of these drawings now. Yeah, perfect. So a 150 is a psychological level, and so 100 would be, 75 would be as well, 175, 200, 225, 250, and so on. So we can see that 125 is right at the 382. We know with the fibs, the most retraceable zone is this golden pocket. That's why we always put it on the chart. If you're new to fibs, please do use this. I don't personally use it as much anymore. I of course use it every day in the videos for you, because again, while I was learning it, this is how I did it, and that's how I found it easiest to be done. But yeah, you can just easily just put these colored lines if you want. But essentially, it's the most retraceable zone. What that means, okay, this is a Fibonacci retracement tool. It says it over here. Fib retracement. Yeah, favorite if you want. So I teach you all of this, every single tool that you would possibly need, all the strategies that you'd need, strategies that I also came up with myself just through noticing patterns. I don't mean chart patterns, I mean just patterns in the market, things that were repeating over and over when certain things happen. I noticed that over the 4 years and have created strategies through that. A lot of things on psychology, how to control your emotions, of course risk management as well. By protecting your money, you actually make more money. This is why I told you guys I sold in January, because at January I sold at about between 38 and 40k, 37 and 40k, and I managed to get back in at 25, between 18 and 25k. So by just saving my money, by protecting it, because getting out the market knowing it was going to go down, by protecting it, I essentially made more by getting back in lower. So yeah, that's essentially what we're believing right now with Quant. We can pump. We found the pattern to take us up. Go check out today's Bitcoin update, because we've also found on the smaller time frames, on the 1 hour and the 4 hour, an inverse head and shoulders pattern that's actually already broken out. Now this is the daily time frame, so this is much larger than that pattern. But of course, if Bitcoin is looking like it could be having a little impulse up, then Quant would do so as well. Just remember, at the moment we're closing below the 236, so we'd need a close above 236 to signal this potential impulse back to the neckline of this inverse head and shoulders on the daily time frame. You can also see it's potentially forming a double bottom over here. Your neckline would be at 120, but because our 382 is a key resistance and we got resistance right there with the body candle close as well as a wick over here, I'm just telling you guys, I'd rather see a close above 125 for me to be pretty certain that, yeah, we're going to see this continuation up all the way until the golden pocket. Because again, this is a fib retracement tool. I've measured this massive impulse. I've just drawn the impulse from the top to the bottom, and you place the fibs essentially like that, and it's going to tell you where am I getting pulled towards, like a magnet. Remember, we were doing this over on VeChain previously, where we said we need to come back to this magnet and need to form a higher low somewhere to break it, but unfortunately went lower, because again, previous support should flip into resistance to continue lower, and we've already got a rejection right there with a close exactly on the 382. So there you go, you got a big area of supply between where the wick is and the body. So this is a whole area of supply. It means when you come into this blue squiggly bit, you should get rejected, and that's what's shown you previously over here. The supply where you started dumping began there, and you dumped all the way to there. So there's a big box of supply right there, if you understand. But not only is there just this big box of supply, there's the big red bear market box, which is 130 to 150. There's the golden pocket, which is 142 to 160. And so even if we come into this area, it's going to be a big struggle. So if it were to reclaim it, that is showing amazing signs. But we've been already saying on the channel, I want to see the 786 broken, 188, to be so certain we are going up. Because I've seen in the past, although this is the most retraceable zone, and it doesn't have to go there, I've seen it stop at the 382, just do this small impulse and then continue lower. I've also seen it go all the way through the golden pocket, make you believe it's the reversal wave, which means finding support on the golden pocket now. Instead of resistance, finding support and going up to the 1618 here. But, of course, the other scenarios where you come up to the 786 and fall straight back under this golden pocket. And unfortunately, guys, that's what we're seeing on the larger time frames. Remember, yesterday we were taking a look at the monthly time frame because it was quite a scary chart that I was showing you. I posted it over on my Twitter. We're currently seeing some very ugly patterns at the moment. It was in yesterday's update as well on this coin-based chart. We're essentially seeing on the monthly time frame a potential dead cat bounce. So this over here is a shooting star. Just go on any time frame. When you see that at resistance, let's just go on a random time frame. Let's just click the 1 hour. Let's just go somewhere. It's just completely random. Let's keep completely random. There we go. And then you can see right here at the resistances, shooting star, shooting star, shooting star, go lower. At each lower high, if you see them, so here, shooting star on the lower high, because you have a high here, you have a high here, you have a high here, and you went down. So in this area, if I'm seeing shooting stars, that's a sell signal. So over there, there's all sell signals. If you want me to teach you this, I do it step by step with all the strategies that you could possibly need, ones that I've created myself. Psychology, how to protect your money. By protecting your money, you make money. It's all done in the video for you. That's currently 50% off them at the moment, from 300 to 150. Everything you could possibly need to become successful. You just need to put simply the work in and be dedicated and disciplined. And it's not going to be 1 month, 2 months, 3 months where you're going to become a master of it. Of course, you can get used to the strategies quite quickly over some months, but you're not going to be a master for a few years. Do you understand that? I wasn't profitable for my first 1.5, 2 years in terms of trading, consistently profitable. But I had investments in stocks and cryptos, and those were going up. While I was learning how to trade, those were going up. So when I was ready to trade, I already had a larger account to trade with because of my investment. So that's why it's key to also invest as well. But yeah, of course, while we're in this longer term bear market, things are risky. You're getting these big swings and many fake outs, manipulated market. That's what I've been calling it for you guys. And essentially, this is showing you that it's a manipulated market because we got above the golden pocket. So that's literally saying we're going to go back to the 1 fib level. We should be preparing for these targets. Anywhere between 800 to 1.8k is your target going forward. As long as you're above this golden pocket, you should confirm it as support. And we're off to those targets way up there. The bull market commences. We had our inverse head and shoulders pattern, shoulder, head, shoulder, taking us up to that target. Well, the inverse head and shoulder was taking us back up to here, retrace, continue, essentially. However, if you lose this golden pocket, you've just basically said that scenario was just a dream, unfortunately, if you understand what I mean. So because it gave us that scenario, all we need to do is confirm on the weekly time frame this bullish cross. Unfortunately, yeah, this chart is not showing us the bullish cross, so I have to go over to another chart for Quant. There you go, that's the bullish cross. So we need to come back down to that for us to head to these targets up here. For these targets up there, but unfortunately fell back under it, not confirming the bullish cross, meaning that was a bull trap. So we need to prepare for the lower levels. I'm going to get rid of these indicators because they're not accurate on this chart. It's not showing us all the data. That other chart, the Quant BTCUSD chart, is the one that's showing all the data. It's got the 200 weekly EMA. No quant chart has a 200 weekly EMA apart from that, because it's been here 200 weeks, as it's going back to 2018. So we're just looking at this. Yeah, you can see pretty much if we're never reclaiming this level, you've got a really ugly pattern forming, shoulder, head, shoulder, which we've been talking about on the channel. Yes, we just looked at Bitcoin on the 1 hour, 4 hour, we've got small inverse head and shoulders. But remember, we've got so many key resistances. Again, we said yesterday and today and the day before and last week, we need to close above 168 and 188, which is interesting because that's where the golden pocket is. And that is the level I said. If we're reclaiming 169 and 188, Quant is going to flip bullish again, validating the inverse head and shoulders, validating $400 and potentially beyond. But if we're not reclaiming 169 and 188, I'm expecting eventually any pump into it just to be resistance again, because you can see if I get rid of this, you've come down. That's the only move you've done on the weekly time frame. So for some weeks, we need to go up and then come back down, and then you form your neckline, and you got your shoulder, head, shoulder, and you're trapped under this level over here. You're trapped right there, and you can't get up there, and you can't break it, and then essentially you just eventually fall through. And then this whole move that you see here, as quick as it went up, it'll go down as quick as it went up. Simple. And then you'd have support in here, and then you'd get a big bounce and everything with bullish again. But then realize you just got this as a big resistance. You're trapped between here. It's either going to push up into here, but again, it's going to push you down. But even if it doesn't push up, it's just going to continue lower, because that's what a dead cat bounce is. A, B, C, continuation. But step by step, of course. Step by step, guys. First move is up, that we're waiting for, this upward push. Don't get fooled. We've got this double bottom potentially forming. Let's go back to the original quant chart. And the inverse head and shoulders here. But all we need to wait for is a close above 126 to tell us we're having this impulse into 150, 160, which is our target out of this double bottom and the inverse head and shoulders. But again, I'm not certain we're going up until we're above 168, 169 to 188. So until then, I just believe any pump we see is a rejection to continue lower. And the more we zoom out, if I place that larger golden pocket, you'd understand. Right over here. There you go. So we lost it as support. We fall back to the old support. We're going to bounce from here. We're bouncing. We're creating this bullish pattern. Let's try and pump into it, but let's not get tricked. Look, every pump, when we lost the low, every pump, oh my gosh, the amount of hate I was getting back here, guys. I said, we're going to $70. We bounced from $83. Haha, you were $13 wrong. No. Everyone's fucking kids in the comments when they're nasty. I understand you might have a bad day, but whatever. But yeah, there's so many kids. Over 50% of my viewers are over 30, so the rude people are not kids, guys. But thank you guys so much for tuning in today's update. Again, since losing 150 over here, I was getting belittled for saying we're going to 70 and potentially 50. We went up, everyone's trolling me. You're completely wrong. Went down. I was like, guys, this is the moment where we do lose it. They were like, nah, double bottom. It was, but because you're in a downtrend, double bottoms don't really work. They might work in the short term, but not really. So you didn't even manage to break the neckline. We continued to $70. I was like, whoa, this is definitely not stopping here. We got 50. We had to take it step by step, 50, 40, 30. We eventually bottomed out at around 37. And I said, at the moment we reclaim $50, that is a psychological level. Remember, every $25 is a psychological level. Well, as we're in the hundreds, of course. When we get to the thousands, it's a bit different. It's every 250. But yeah, easy. Thank you guys so much. Like, subscribe, and comment. I have 50% off my course at the moment, which teaches you everything. Head over to my Twitter. I've also got a giveaway there. If you can't afford my mentorship, we can sort something out. We can do half the lessons or so, and that'll be much, much cheaper for you guys. Thank you guys so much. Like, subscribe, and comment. Check out the memberships, as members can ask for chart requests at any moment. That's the YouTube members. If you want to send in a super thanks, that's under the video. But make sure the minimum, like, subscribe, and comment, and I'll catch you in the next one. Peace.